Absolutely. It's another great quarter. The momentum continues to build. I mean, they own the productivity suite. I don't know anybody that doesn't use Microsoft Office. They have successfully transitioned from a license model to a subscription model, and they keep improving it. Almost every other week you see an upgrade, and now everybody's paying $8 to $16 a month. They still dominate the desktop operating system, and they're growing very strongly in cloud, and they have a tremendous presence in gaming. So all the key areas, they continue to do well.
Robert, how long can they keep up 70 to 90% growth in Azure cloud business?
I mean, that's amazing. And I think to Ivan's points, this is a great company that's hitting on all cylinders right now. But the only problem is right now is if you look at where this stock is, it's kind of in no man's land. It's way too expensive for value investors. Those who are collecting a dividend, now that's down to 1.5%. And it just doesn't have the type of growth, I believe, to where you're going to play the type of premiums you are 24 times forward earnings right now. And so even if you want to take a look at the back of where it's been, 18.5 times earnings, and say, well, that's in the rearview mirror, we've changed, it's cloud now, and that's the future, we'll put a Google multiple on it, and that gets the stock somewhere around $95 a share. So we like the company a lot, but at these valuations, we can't get too excited about it.
Jump in here, Nancy.
Yeah, I mean, I guess I would just like to think about other places where you want to be in this environment. So this is a high-quality company with a high-quality management team, and I think sometimes when you're in a decelerating growth environment, this is exactly where you want to be despite valuation. So I'd like to hear your feedback on that.
Robert, what do you think on that?
Yeah, I'm always afraid to say despite valuations. I think valuations matter a lot. And, you know, stocks don't go down because they're bad companies. The S&P 500 isn't down today because there's 500 bad companies. It's just at these prices, and especially in the type of environment we're in right now where people are giving up the prospect of future growth for things like dividends. Look at General Mills, look at Procter & Gamble. Those stocks rallied hard today. That used to be Microsoft with a 2.5%, 3% yield, but now here at 1.5%. 24 times forward earnings, I just can't get that excited about the stock.
Ivan, can Microsoft shrug off a big downtrend in the NASDAQ and the broader tech space?
I think it can hold up. I mean, I do like dividends, but dividends don't support stock prices. And they do have plenty of cash to increase their dividends and increase their share buyback. So there's no place I'd rather be than Microsoft. And they have other growth drivers. I think that they will improve. I think the next big area is voice interface, and they can improve on Cortana. That could be another key that continues to tie their ecosystem together. They own the gaming box in the home, which also can tie into the Cortana home interface. They're doing very well with their hardware. I mean, the Surface laptop and the Surface tablet are selling very well. They just introduced a lower price model to better compete with Apple's iPad. But they still experience very strong demand for the higher price models, as does Apple experience strong demand for their higher price phones. So I think they're hitting on all cylinders. And I mean, imagine your computer wouldn't work without them for the most part, and you wouldn't be as productive without the Office suite for the most part. And they are benefiting from the trend to the migration to the cloud. So they are on the forefront of every technology trend.